Hi and welcome to a Guo Tax and Accounting Solutions presentation on the Self-Employed Health Insurance Deduction. Before we begin, we want to remind you that this video is intended for educational purposes only. Nothing mentioned here constitutes legal or tax advice. We do not provide legal services, and if you would like tax advice or services, please feel free to make an appointment via your portal or using the Contact Us feature of our website. Thank you for joining and welcome to our brief guide on the Self-Employed Health Insurance Deduction. If you're a sole proprietor, a partner in a partnership, or a more than 2% shareholder in an S corporation, this deduction can save you money on your health insurance premiums. So, let's dive right in. A brief review of the tax rules on health insurance premiums may be useful. Health insurance premiums paid by non-self-employed taxpayers are deductible as itemized medical expense deductions, but only to the extent your total medical expenses exceed 7.5% of your adjusted gross income, SEHI. Because of the floor that applies to the medical expense deduction, if total medical expenses don't exceed the percentage of AGI limitation, no itemized deduction is available. However, a self-employed taxpayer can deduct as an above-the-line deduction, reducing AGI by 100% of the health insurance costs for the taxpayer, spouse, and dependents, and for any child of the self-employed taxpayer who is under age 27 as of the end of the tax year. Here is a quick example. M, who is self-employed, pays $4,500 in health insurance premiums and has no other medical expenses. M's AGI is $80,000. Since 7.5% of $80,000 equals $6,000, M could not claim an itemized medical expense deduction for the health insurance premiums. But since M is self-employed, M can deduct the entire $4,500 above the line. Before we explore the specific rules for different entities, let's go over the general rules that apply to everyone eligible for the self-employed health insurance deduction. First and foremost, to qualify for this deduction, you must be self-employed and not eligible for an employer-sponsored health insurance plan. This means that if you have access to a plan through your spouse's employer, for example, you may not be eligible for the deduction. Secondly, the deduction cannot exceed your net self-employment income. It's essential to calculate your self-employment income accurately and ensure that the deduction stays within this limit. Additionally, and this may go without saying, you must be legitimately self-employed. This means that your self-employed status cannot be primarily for the purpose of tax avoidance. Let's move on to entity-specific situations, starting with sole proprietors. As a sole proprietor, you run your own business and file your taxes as an individual. Now, you may be wondering if you're eligible for the self-employed health insurance deduction. The answer is yes. If you pay for your health insurance premiums out of pocket, you can deduct them from your taxable income. So, how do you calculate the deduction? It's relatively straightforward. Take the total amount you paid for health insurance premiums throughout the year and subtract any premiums that were already deducted on your personal tax return. The remaining amount is what you can deduct. As mentioned before, the deduction cannot exceed the profit you made from your business. If your business didn't generate a profit, unfortunately, you won't be able to claim the deduction. It's also worth noting that this deduction is taken on your personal tax return, specifically on Form 1040, Schedule 1. Now, let's shift our focus to partners in a partnership. Partnerships involve two or more individuals who share ownership and responsibilities in a business. As a general partner, you're considered self-employed, which means you're eligible for the self-employed health insurance deduction. It gets more complicated with other partner types, including limited partners. The calculation for partners is similar to that of sole proprietors. You deduct the portion of your health insurance premiums that you paid personally. Just remember that each partner can only deduct up to their own share of the net self-employment income, based on their ownership percentage in the partnership. Partnerships usually file an information return called Form 1065. However, similar to the sole proprietor, the deduction for health insurance is still claimed on the individual partner's personal tax return using Form 1040, Schedule 1. Lastly, let's talk about more than 2% shareholders in an S corporation. If you're a shareholder in an S corporation and own more than 2% of the company, you're treated differently than regular employees when it comes to health insurance. One unique aspect for more than 2% shareholders is that an S corporation can reimburse them for their health insurance costs or pay for it directly. However, to qualify for the self-employed health insurance deduction, the amount must be included in the shareholder's W-2 income. The amount of your deduction will be limited to the W-2 income from the S corporation and is claimed on the shareholder's Form 1040 Schedule 1 similarly to the other entity types. By including the costs in the W-2 income, it becomes subject to federal income taxes. However, it is not subject to payroll taxes such as Social Security and Medicare taxes. It's important to work closely with your S corporation and tax professional to ensure that the health insurance costs are properly accounted for and included in your W-2 income. This way, you can take advantage of the self-employed health insurance deduction while staying compliant with IRS regulations. Small business taxation can be complex, and the self-employed health insurance deduction is no exception. To ensure compliance with IRS regulations and applicable standards, it is important to familiarize yourself with the specific rules that pertain to your business structure and consult with a tax professional. Our office has experts who can help you navigate and implement tax-saving strategies such as this and are available all year round. This has been a very brief overview of the self-employed health insurance deduction. For a more in-depth discussion, as well as help in determining if this tax strategy is right for you and your business, feel free to reach out at any time. We will be happy to help you get on the right path and can help with your business and individual returns, as well as with tax planning and bookkeeping services. Thanks for stopping by, and we at Guo Tax and Accounting Solutions are looking forward to working with you.